Welcome to the Red Cloud Research Roundup, hosted by Red Cloud Financial Services. It is July 24th. BC-based company Westhaven Gold has recently released a robust preliminary economic assessment of its Shovelnose Gold Project. VP mining analyst Taylor Combaluzier is on his own today as he provides details on the news. Following up, he has an update on Grid Metals for its maiden mineral resource estimate at the Donner Lake Lithium Property in Manitoba. So with that, Taylor, take it away.
Thank you for the introduction. I'll be speaking about Westhaven Gold. We have a buy rating and $1.30 target price. Westhaven announced a PEA at its 100% owned Shovelnose Gold Project in BC. It is based on an updated, higher-grade underground mineral resource estimate for the south zone of the project, which supersedes the old 2022 pit-constrained resource. It delineates 830,000 ounces of gold equivalent, of which 778,000 ounces is gold, and the grade is 6.32 grams per ton gold equivalent. The PEA contemplates 1,000 ton per day underground operation producing 534,000 ounces of gold and 2.1 million ounces of silver over a 9.5-year mine life, with an after-tax NPV 6% of Canadian $222 million. It also has an after-tax IRR of 32% and a modest life-of-mine capex of $247 million Canadian. The after-tax NPV 6% is based on an $1,800 gold price and $22 silver price. At current spot prices, it rises to Canadian $268.4 million. The steeply dipping mineralized veins allow for low-cost, long-hole, and traverse stoping, targeting selective higher-grade zones. This results in initial capex of 142 million Canadian and sustaining capex of just under 105 million. The low cash costs of US $611 per ounce and all-in sustaining costs of $752 per ounce provide an opportunity for high-margin mining. In our view, this PEA is an important milestone for Westhaven as it wraps economics around its flagship Shovelnose project and demonstrates its value to the market. Westhaven is one of our top picks, and we believe that the South Zone is only the beginning of what could eventually become a multi-million-ounce gold camp at Shovelnose. We view resource growth as the best catalyst for a potential material re-rating of the stock. We expect Westhaven to continue working towards delineating sufficient gold resources that could be of interest to larger mining companies. We've incorporated a DCF analysis for Shovelnose in our model and have raised our target price to $1.30 per share, which is a 381% lift to the current market price. We estimate Shovelnose to produce 50.7 thousand ounces of gold per year between 2029 and 2038. Assuming total cash costs of $681 per ounce, initial capital, and life of mine sustaining capital costs in line with the PEA, we arrive at our own NPV 6% of $189.8 million. That's a 14% difference compared to the 2023 PEA. Next, I'll be speaking about Grid Metals. We have a buy rating and 60-cent target price. Grid is a Red Cloud banking client. Grid announced a maiden NI 43-101 compliant mineral resource estimate on its 75% owned Donner Lake Lithium Project in Manitoba. The maiden mineral resource outlines 6.8 million tons at 1.39% Li2O in the inferred resource category. That compares favorably to Red Cloud's mineral inventory estimate of 4 million tons at 1.4% Li2O. That beat our tonnage by 41% and the grade was in line. Grid also announced that it signed a binding lease agreement with 1911 Gold Corp to use its nearby True North mill for the production of lithium spodumene concentrate. True North is a permitted gold mill utilizing a flotation circuit with nominal capacity of 475,000 tons per year. It's located 85 kilometers by road from Donner Lake and was last operational in November of last year. The initial lease term is 5 years. It includes a 2-year notice for cancellation and may be extended for an additional 5 years. This totals 10 years of potential production. The tailings facility is also permitted but would require another permit for the reconfiguration to process lithium. An agreement was also signed for a scoping level mill reconfiguration study. The study should be complete before the 90-day due diligence period ends. The existing Tanco MOU provides an annual capacity of 200,000 tons per year, and together with the True North mill would provide Grid with an effective capacity of 675,000 tons per year. Given the current resource of approximately 6.8 million tons, that could potentially support a 10-year mine life. We believe Grid has achieved a concrete milestone on its pathway to developing a lithium production business in Manitoba. We are encouraged that the mineral resource beat our estimates and are of the view that the open pit portion could potentially be mined in the near term and be toll milled to provide a source of cash flow for the company. We increased our target price to 60 cents. We now derive an in situ value for Donner Lake using the mineral resource and have updated our LCE in situ multiple from $200 per ton to $400 per ton to reflect our increased confidence in the mineralization and to be in line with peer trading multiples. We have also decreased our estimates for East Bow Lake, given that the company is not presently focused on that asset.
Thanks for listening to the Red Cloud Research Roundup podcast. We hope you enjoyed this dive into recent notable mining news. Remember, you can join us every Monday for new episodes, and as always, you can head over to redcloudsecurities.com to access our research portal, to read full disclosures, and to sign up to our email list. That's it for this episode, and see you next time.